What's up, YouTube? My name is Ty, financial professional. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is BBBY, Bed Bath & Beyond. This finishes at $11.03 today. That is down 40.54%.
And it's gone.
So we've been covering this stock for the past 3 weeks, ever since it squeezed. This went from the low of 440 all the way up to the high of 30, which is over a 580% upside. So it was an epic short squeeze, but in the past 3 days, this stock has been getting absolutely wrecked. This is a falling knife right now, and there appears to be a lot more downside to go. So I've been saying up to this point that I'm really happy for the apes, but it was starting to look very dangerous, and sooner or later, it was going to come crashing down, just a matter of when, not if. So I was encouraging for people to sell and actually start shorting this. Got a lot of hate for that, to be expected, but here we are. And there was a reason as to why this stock tanked so hard yesterday. Just a quick recap. Ryan Cohen dumped his entire stake of 9.45 million shares, and some call options were included in that. So his average price was $15, and he sold between the prices of $19 and $29 for a $58 million profit. Also, the CFO sold his stake as well. And in addition to that, we had 2 price downgrades. Wedbush downgraded to $5 and KeyBank downgraded to $2. And that comes after Odeon downgraded to $7.5 and B. Riley downgraded to $5 not too long ago. So that was breaking news yesterday in the aftermarket, and the negative momentum continued into today. So a lot of apes made money. Very happy for those apes. But at the same time, a lot of apes got wrecked as well. And I do feel bad, but let's be honest, we all knew this was going to happen. So if you lost money, I know it hurts, but everything is a learning lesson. Take what you can from this experience and come back stronger next time. Once again, this was number 1 on StockTwits, had over 22,000 mentions. So once again, we're going to analyze it. And this is going to be more or less the same from the previous shows, just with the updated price action. All right, let's go ahead. Let's jump right in and analyze here. So first of all, we have this bull flag forming here. Here's the flagpole, and here's the flag. So that's a bullish indicator that is telling us that the stock may break out to the upside. Although it does appear like the bull flag is getting rejected here. So that's not good. We do have a double gap down. It's kind of hard to see here, but the first gap down was back at 2250. So that's a bullish indicator that is telling us that the stock should come back up to 2250 to fill that gap. And the second gap down was created today at 1615. So that's another bullish indicator that is telling us that the stock should come back up to 1615 to fill that gap. So those gaps could fill in the short term if this stock has a dead cat bounce, or in the longer term when the stock eventually has its day again and squeezes again. And now on to the bearish stuff. We also have a double gap up. Again, pretty difficult to see here, but there's a gap up back at 830. So that's a bearish indicator that is telling us that the stock should come back down to 830 to fill that gap. And then there's another gap up at 650. So another bearish indicator that is telling us that the stock should come back down to 650 to fill that gap. And those 2 gaps should fill in the short term. Here we had an ascending channel forming. The upper channel was around $27 and the lower channel was around $20. So if this broke 27 to the upside, that would be bullish. And if this broke 20 to the downside, that would be bearish. So this did in fact break 20 to the downside. So the ascending channel is currently a bearish indicator. In the aftermarket here, this is pulling back down to 1040. So if this aftermarket action holds, that would be a bearish indicator for Monday. That is suggesting that Monday, the stock will sell off as well. We do have this cup and handle, bottom of the cup being the low of 440. And there can be multiple possible tops. It can be $30. And if the top is $30, that would be a bearish indicator, because that would mean the stock is due for some significant pullback to form the handle. But in the longer term, this is part of an even bigger cup and handle where the top can be $39.30, $40, $44.55, $44.55, or the high of $53.90. Although I do believe this did top out at $30. So the cup and handle can be bullish or bearish depending on where the top is. But it seems like in the short term, the cup and handle is bearish, and in the longer term, the cup and handle is bullish. RSI is currently at 51, so that is extremely average. According to the RSI, the current price of $11 is around fair market value. And just yesterday, this was in overbought and overvalued territory. So significant pullback in the RSI there. And if you guys want to follow along, the link to the chart is in the description down below. So right now, this is trading between the sideways channel, the rectangle of 1125 and 1090. So if this goes to the upside, next levels of resistance would be 1125, 1170, $12, 1260, 1295, 1340, 1380, 1420, 1450, 1490, 1530, 1565, 1620, 1665, 1710, 1750, 1780, 1805, 1835, 1855, 1890, 1930, 1965, and then 2015. There is resistance above 2015, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 1090, 1055, 1015, 965, 940, 920, 885, 855, 815, 795, 750, 715, 695, 665, 640, 610, 585, 550, 520, $5, 475, and then the low of 440. So right now at the current price, $11, the channels to the upside and the downside are very wide, so expect significant price action either way this goes. However, if/when this breaks 715 to the downside, the channel starts to narrow, so expect a significant decrease in price action if/when this breaks 715 to the downside. And this did 134 million in volume today, very significant volume, way above the average of 11.5 million. So the sell-off today was confirmed by the volume. And this is the third consecutive day of a pullback in volume. So it does appear like the momentum is cooling off and the squeeze is coming to an end. Okay guys, just my opinion, not financial advice. So like I said, it's been an epic short squeeze, went up almost 600%, but let's be honest, we all knew that this was going to happen. And I will say, I knew it was going to crash, but not like this. So I hope you guys took your profits, and I'm sorry to everyone who got burned here. So it does appear like the squeeze is coming to an end here. This already pulled back very significantly from $30 down to now $11. And unfortunately, there's still a lot more downside to go here. Again, we have some very strong bearish indicators right now in the double gap up, ascending channel, cup and handle, and aftermarket action. Way more bearish indicators than bullish indicators right now. So therefore, if you want to go long, not financial advice, I would not do that, and I would not recommend that. You would not be buying into a dip, you would be buying into a falling knife. Everyone is selling right now, and the institutions are starting to short this down, actually. So you're likely going to get burned here, going long. It is possible that the squeeze is not over yet, but very unlikely. So in the short term, again, this may come back up to $22.50 to fill the gap there. And from the current price of $11, that would be about a 105% upside potential. So a pretty good amount of upside potential here in the short term. And again, this should eventually come back down to $6.50 where the gap is to fill the gap there. And from the current price of $11, that would be a little over a 40% downside potential. So I would say going long here at the current price, $11, would be a high risk, high reward play. Not really worth it in my opinion. So if you want to go long, please do that at your own risk. And it would definitely have to be for a quick scalp. Get in, get your money, get out. Make sure you set your sell orders and your stop losses. But honestly, if you're a bit patient, again, this should eventually come back down to $6.50 to fill the gap. And I think that would be an excellent entry, a way better entry than the current price of $11. So from $6.50 up to $22.50 where the gap is, that would be over a 245% upside potential. So massive upside potential in the longer term at $6.50 and really shouldn't go too much further to the downside. That's near the all-time low. So you really can't go too wrong there, buying in at $6.50. So I don't like the current entry of $11, but I can support going long at $6.50. And if it pulls back, then you can just average down at the supports that I mentioned before. Now, if you want to go short now, financial advice, you missed huge downside already, so that's very unfortunate, but there still is a lot of downside to go. It's not too late to go short here. Again, this may come back up to $22.50 to fill the gap there, which would be about a 105% upside potential. And again, this should come back down to $6.50 to fill the gap there, which would be about a 40% downside potential. So I would say going short here at $11 would be a medium risk, high reward play. Definitely worth a shot in my opinion. I say medium risk because, again, there is the possibility of a dead cat bounce. Just pretty unlikely, but possible. And I say high reward play because, again, a 40% downside potential. So as long as you're able to withstand the upside pressure here, this should eventually pull back down to $6.50 where the gap is, and that should be some pretty fat tendies on the downside. So I can support going short at the current price, $11 and higher. And again, I would cover at $6.50 where the gap is for a relatively easy 40% downside gain. So sorry to everyone who lost money in the stock today. Consider taking profits if you're still up. Not financial advice. And good luck to everyone currently in the stock and to everyone looking to take a position. This is BBBY, Bed Bath & Beyond. Thanks everyone for watching today. I appreciate you guys. Please like the video. Please subscribe and catch me every weekday after market close on the Smarter Gambling Show. You apes already know. Diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys on Monday. Have a great weekend, everybody. Peace out.